fresh off its IPO, Newsmax's stock could have experienced one of the craziest price actions in my recent memory. It opened at $14, which is considered a huge gain already from its IPO price of $10. But then it rallied all the way up to $265. That was a staggering 2,550% increase from its IPO price. But then the stock price fell all the way down to $16, leaving some poor early investors with losing positions. So the question is there still hope for Newsmax, or is this the end of the road? Stay tuned and find out. Hi, my name is Rick Orford, and I help investors like you make informed decisions with your money. And while I'm not a financial advisor, I have been trading stocks and options since 1999, and that means I've seen my fair share of IPOs over the years. By the way, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insights and stock recommendations for investors of all skill sets and risk levels. And y'all know how much I love researching new stocks and finding the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times, and you can scan this QR code or visit fool.com/RickO to get your 10 stock picks right now. So let's kick off this discussion by answering the question, what is Newsmax? Newsmax Incorporated is a holding company that owns Newsmax Media. They were founded back in 1998, and today they're considered a conservative-leaning media company and operates mainly as a television broadcaster and a multi-platform content publisher. Its segments include traditional broadcasting and digital affiliates. Newsmax concentrates on providing news, political analysis, and lifestyle content primarily aimed at America's baby boomer audience. The company has 2 segments. The first is Service, which accounts for the majority of its business and includes its channels, podcasts, and other broadcast media. The other is Products, which covers magazines, newsletters, and alternative health products. Newsmax released its Q1 2025 financials last month, its first quarterly filing as a publicly listed company. Revenue came in at $45.3 million, which is up from $40.6 million last year, primarily driven by its broadcasting segment. Meanwhile, the quarter ended at a $17.2 million loss, and this is a vast improvement from last year's $50.7 million loss. Zooming out, the annual numbers gives us a better picture. 2024 revenue increased year over year from $135 million in 2023 to $171 million in 2024. However, its net loss jumped from $41.8 million to $72.1 million over the same period. And this tells us the company is growing its revenue, but it's still far away from achieving any profitability. By the way, the data in this video is powered by Bar Chart. It's one of my favorite tools that lets you find data on thousands of tickers and allows you to filter by price, volume, sector, and more so you can find winning opportunities in seconds. I use it every day, and you can set up a free account by scanning this QR code or click the link in the description. Now, let's have a look at Newsmax's pros and cons, which I like to call the bull and bear cases. And we'll start with the bear case. While media companies thrive in reporting bad news, being the focal point of one isn't what it had in mind. Dominion Voting Systems filed a $1.6 billion lawsuit against Newsmax due to its allegedly publishing false and defamatory statements in the 2020 elections. Delaware Superior Court Judge Eric M. Davis ruled against Newsmax last week on Dominion's defamation claim, while leaving the rest of the complaint up to a jury. And while there's no clear amount yet, Dominion's previous settlement with Fox News, another right-wing media company, ended at around 25% of the original $2.96 billion ask. And if that's any indication, then Newsmax may be on the hook to pay as much as $400 million in settlement. And again, the company's annual revenue in 2024 was just $171 million. If that happens, Newsmax is going to find themselves in quite a pickle. And that's on top of the company paying $40 million to Smartmatic last year. If this keeps happening, then I will question Newsmax's ability to continue operating. Next is the elephant in the room, and that's online content. Newsmax relies heavily on cable broadcasting for its revenue. However, traditional media has declined over the past decade, with consumers heavily shifting to streaming, podcasts, and social media. Most advertisers target the 18 to 34 demographic on newer platforms. However, Newsmax is targeting the 45 plus age, which limits its appeal to digital first advertisers and, by extension, its growth. To remain viable in an increasingly online world, Newsmax will need to make major changes in its business model if it's going to succeed. Because the way I see it, viewer migration away from cable TV and traditional broadcast media will just continue to accelerate. Then there's the company's political views. Newsmax is undoubtedly a more conservative news platform, which may have its appeal now that Trump is in charge, and certainly has a built-in conservative audience. However, its opinions and views may alienate more moderate viewers, and pushing its agenda might make it hard for audience to see it as an objective source of information. Also, there's legal risks associated with aligning oneself with one side of politics, as evident in its recent legal battles. Indeed, a political identity might make it easier to reach a specific subset of viewers, but it also makes it harder to be perceived as a credible news source, which can impact longevity and profitability. However, it's not all doom and gloom at Newsmax. The company has recently signed an agreement for the distribution of its cable channel on Hulu Plus Live TV, which will start next month in July of 2025. It's also secured broadcasting rights in the Dominican Republic, Israel, and Armenia, thereby extending its reach to more than 100 countries. So it'll be worth checking their future financials to see how this affects their revenues. Then, there's also the fact that Newsmax only sold 7.5 million shares in its IPO, and that's out of 128 million available. And that represents roughly 6% of the company's available shares. And what does this mean? Well, it's a question I get a lot in my Discord server, so let me give you the answer. Given the low float, this stock will be subject to massive volatility. With so few shares available, even modest trading volumes can have a big impact on the share price. This type of trading environment can attract a significant amount of speculative trading, which can cause prices to fluctuate to extreme highs. Although admittedly, that's mostly a benefit for short-term traders. Having just listed its stock a few months ago, Wall Street analysts also haven't rated the stock. Now, if I were a short-term technical trader, I would examine its chart, watching for signs of accumulation and volume spikes, as well as the potential catalyst that could push prices higher. However, from a long-term fundamental perspective, the company's legal exposure, outdated revenue drivers, and the fact that it's bleeding from its bottom line are not good signs. So unless Newsmax unveils a realistic plan on how it'll course correct, I'd stay on the sidelines with this one. Overall, NMAX stock is a watch for me. And there you have it, my quick deep dive into Newsmax. What do you think of the company? Were you able to get in on its IPO? As always, leave a comment below and I'll be happy to get back to you. And if you'd like me to do a deep dive on another stock, do let me know as well. Thank you so much for watching, and I'll see you in the next video.